What's up, guys? In this video, we're going to be looking at the top 3 penny stocks to considerably buy or to watch for next week, because these stocks can have a potential to spike up to the upside if there's good opportunity. But also, it's really important to have a plan before you trade these 3 speculative stocks, and 2 of the stocks, actually, a few people recommended in the comment section and had questions about these stocks. So that's why I'm going to be making videos about them. So if you have any stocks or anything that you want me to cover on these videos, make sure you drop it in the comment section below and I'll try to make a video about it, guys. But now let's get right into the video. Alright, guys, so before I go over the top 3 stocks, make sure you like the video, and if you have any questions or if you are new to the channel, make sure you subscribe so I can make more videos like this in the future, guys. So I really appreciate it. Let's try to get to 200 likes. That'll be fantastic. So anyway, the first penny stocks that we're going to be looking at is going to be GNUS. Now, this stock has been spiking and has been getting a lot of attention for the past few weeks, mainly because there was a news that came out that the company was going to produce their own cartoon channel. So this was the main catalyst or news that made the stock to spike up to the upside. But however, even when you look more in detail when you do more research about the company is still, not profitable. Just the majority of these penny stocks are not profitable, but that does not mean that they cannot go up or they cannot spike up when they kind of stir in the right direction to kind of grow their companies, to the positive side, So unfortunately, that is just one of the catalysts for this company. It doesn't have any kind of how it's going to execute the plan. It just came out and said that they're going to be producing a cartoon channel that's going to be available for free. And, they don't have specific plans on how they're going to generate revenues and things like that. But however, that is just the news that the stock needed for it to spike to the upside significantly. As you can see over here, it was kind of trading around, 0.28 cents. As you can see, the 52-week range for the stock was around 0.05 cents to $11.73. And eventually, when the news kind of came out of that, it spiked up to close to the high that it made was $11, so, and now it's currently trading at 4.16. However, there's still potential for it to spike up again to the upside if we can actually try to time it or kind of figure out exactly a good risk reward area that we can get involved in it using technical analysis. There is a good potential for us to get involved in the stock, so as you can see over here, the company is still trading a lot. The average volume is around 38 million and it's trading a lot, like 95.9, close to 96 million of this company shares are being traded a lot. So people are buying and selling it a lot, so that is something that people are really interested in trading a lot. When you look at the technical analysis, it looks exactly like a pump and dump, so as you can see over here, it just broke out of the $2 area and it's just spiked up to close to, the 52-week highs that it made was around, $11.70, close to $12, and then it's just started to trend down. However, it's kind of, there's an opportunity for it to spike up again. It kind of spikes up like 10-20% here and there. As you can see here, this day on Friday, it spiked up to 20%, so if you can actually find an area to use as a support and resistance, what I'm going to be showing you in this video, there's a potential for us to make, 15 to 20% of our money by trying to figure out exactly what is an ideal price point we can get involved. So as you can see over here, the area that it kind of bounced off of this level was around like $3.45. And after it got to the $3.35, it kind of as a support area and it bounced back up. So we can still use this area since the stock significantly bounced back up from this area. So we can risk off of this level. So basically what that means is if the stock continues to go down a little bit and trends down to $3.45, we can use this area as a support and then we buy the stock, So however, if we get involved in this stock and the stock, goes down like a few cents or even just goes down to that level, that is a red flag. We need to get out as soon as possible. However, there is good risk reward because the stock eventually went down significantly. There is a potential for it to kind of spike up for like 1 or 2 days or give us a very nice bounce before it kind of goes down, because the majority of these penny stocks, unfortunately, even though they spike up significantly to the upside, the overall trend is to the downside. So that's why you need to be super careful. You don't want to be holding these stocks for long term. You just want to be getting in and out, get your profit, get your 10-15% return, and then you want to get out. That's exactly what I do, and that is basically what my plan is, as you can see over here. So you can use this area as the support that it bounced back up again, and your first potential target also, which is super important. You want to have a plan exactly how much money that you want to be risking and how much you want to get involved after the stock. And the short term, that you can use the resistance area, like the whole number 5, $5 is resistance area, just to see that. And you can use this area as support to get involved in it. But anyway, that's just a technical analysis, guys. But share outstanding is 96.33 and the share of the float is 41.85. And the institutional ownership is low. Not a lot of institutions own this company. It's basically retail investors, so that's why you need to be super careful. Okay, guys, so the institution ownership is 5.20%. The institution transactions is 79%. So even within the 5.2% of the institution ownership, they've been transacting a lot, so they've been doing it that a lot. So 79.9, 79.64%. So insider ownership is 29.9, 21.12%. So you need to be super careful when you're trading these company. I know it's been on the headlines. A lot of people are actually looking at this stock, and a lot of articles are coming out about this stock, about the channel that they're trying to come up and things like that. So be super speculative, but that is basically the plan that I have, is basically to look at the support area. If it comes back, if it goes below, to just get out as quick as possible, and to take 10-20% profit if it bounced back to the $5 area. So that is basically the plan for GNS. Now let's move on to the second stock. All right, guys, before we move on to the second stocks, make sure you like the video. If you're new to the channel, make sure you subscribe. If you have any questions, make sure you drop it in the comment section below, and I will respond to every comment that I get. So anyway, guys, so as you can see over here, the second stock that we're going to be looking at is going to be HTZ. Now this stock has been in the news a lot, mainly because this company has filed for bankruptcy, and it actually spiked up significantly to the upside, even though that was a very bad news. And people are saying that a lot of people in Robinhood actually bought this stock, and it eventually led to the stock to spike up again. And the company is actually going to be offering 1 billion share of the stock so they can raise funds so be able to get out of the Chapter 11 bankruptcy. So basically, even though the company filed for bankruptcy, that does not mean the company is going away. The bankruptcy just states that they're going to find or restructure some of the deals that they have, and they're trying to figure out exactly how they're going to pay off their debt. So basically, in total, HTZ has around like $8 to $9 billion in debt. So that is a lot of money, but they're going to be raising $1 billion basically from the shares that they're going to be offering. So they're trying to figure out, elongate the life of the company, but the company's still going to be there. They're still just going to have to, even though they filed for bankruptcy, they're still going to be there. They're still trying to figure out exactly how they're going to pay off their debt. So there's a lot of attractions. People are buying the company a lot. It's a great opportunity for the company to get back to where it's from. Basically, it was trading around like $16 before this whole pandemic thing kind of happened. However, it's going to be a long time before we get to that price point. So one of the important things that you want to be looking for specifically is the company came out outright, told investors that there's a potential that they're going to be losing. There's a high risk that they can lose all of their money if they invest in it. So that's why we need to be super careful if we are trading it or swing trading it of this company. So in the long term, this company looks like it's going to go down. It's going to trend to the downside significantly. That's why you have to be super careful. As you can see over here, the 52-week low range that it made was around 40 cents, and the high that it had was like $20 before the pre-pandemic era. So the average volume also is insane, guys. So it's 60.7 million shares is traded, and the volume is around 285 million, guys. So a lot of people are buying and selling, and this company is just been trading a lot. It's been on the news. It's getting a lot of attractions, and well, you have to be super careful if you want to trade the stocks. This was also one of the companies that a few subscribers asked me about, so that's why I'm making this video. That's why I included it in this video, guys. But anyway, as you can see over here, I'm going to be using the chart to explain to you guys exactly what are the key price point levels that we can use if you want to trade this stock or to buy, if you want to buy this stock, if you want to buy this company, what is the ideal price point that you want to be looking at, and what is the profit that you want to take off of it. So as you can see over here, it kind of broke out of this level. After it broke out, it just shot up to around $6.50, to $6.18, and it just went straight down to $2. Now it's bouncing back up again. So we're going to be using this area of support, since it's kind of holding up right now as it's acting like as a support area. So if price continues to come down to this level, there's a good opportunity to kind of buy the stock and wait for it to spike up again, because eventually if some news comes out, some positive news comes out of this, I don't think nothing positive can come out of it. But anyway, if people decide, or if some institutions, believe that this company can survive this pandemic, and if they believe when they actually got the funds, if they actually be able to raise the $1 billion from the investors and see positive results, this company can actually survive this whole pandemic thing, and it can thrive eventually in the future. But however, right now there's a high probability of it going down, so it's very super speculative. That's why you have to be super careful. So if you want to get involved in it, if you want to buy this company as of right now, you can use the $2 area as a support. So what that basically means is if the stock eventually comes to the $2 area and it goes below that, you want to get out of it. You want to get out as soon as possible. But however, if this keeps holding the $2, if the price keeps staying above the $2 area and kind of approaches it, there's a good potential for it to kind of at least spike one time. So your plan is, to get involved with that risk, the $2 area, and to get out, for at least a 10-20%, because it can bounce significantly. It can bounce pretty good. It can gap up to the upside. Also, there's a risk that it can definitely gap down, and we can wake up to like the stock opening up around like 50 cents or something. So that's why there's also a lot of risk of gap up and gap downs. However, if it still can hold above this $2 area, that is the important price point that you want to use. And your first price target is basically going to be this, holding this kind of price level over here. You want to target the $3.50 area basically as your first profit target. If you believe in this company, you think that it's going to survive, you can hold it. If you want to invest in it, you use, the product, you use. If you have used this company in the past and you believe it's a great company and you think it's going to thrive and things like that, you can definitely, just hold your shares if you believe that, and just use the $2 area as a support for you in case things go south. You want to get out if it goes below that, so that's why it's super speculative and super risky. That does not mean, you have to, it still mean that you can trade it, you can buy and sell it, make a profit off of it, but still it's super speculative. Now let's move on to the third stock. Alright guys, so the third stock we're going to be looking at. Before we go into the third stock, guys, make sure you like the video. If you have any questions, make sure you drop it in the comment section below, and I will respond to any of the questions that you have as soon as possible, guys. Anyway, guys, the third stock we're going to be looking at is going to be XRF. Now, this is also super speculative stock that I'm watching for next week to potentially buy, because it's kind of approaching a very good price point if it breaks out, mainly because, the share of the float is only 0.66 million. So basically that's 660,000, shares of this float is available to trade. That means, it's very, very tiny. And if it starts to spike up, if it starts to go to the upside, it can definitely go to the upside. And also that is true to the downside too. If it starts to sell off a lot, it will go down drastically to the upside, and also the price can change drastically within one day. It can go up like 100%, or it can go down like 50% and things like that. So that's why you have to be super careful if you are going to get involved in this company. But as you can see over here, the institutional ownership is basically 3.3%. So it's basically mainly retail investors, retail traders trading this stock, and there's also be super risky because it can be manipulated too by people that are in the chat rooms that want to trade it. However, that does not mean that you cannot make a profit off of it by buying it, because you can just join the crowd if it breaks out of the $3 area that we're looking at over here as the resistance area. It can be a multi-day breakout, and if it stays above the $3 area, you can quickly, scalp it, or you can just buy and sell it as quick as possible and make like 10-20%, because these companies can spike up a lot. Like, guys, it can go up to like 100 to 200 to 300% within one day. So you just have to be super, super quick and get involved and sell it as quick as possible too. So this is the stock that you don't want to get involved in it and hold it for like 2-3 days, because the majority of the time it's just going to start to go down, so you just want to get involved in it. If you have like one day trade or anything like that, you can just like, if it breaks out of the $3 area, that's the area that you want to look at, and then you can buy it. And then if it spikes up 10-20%, you lock in your profit. And then if it starts to go down, if it goes below the $3 area, then you go out as quick as possible. So this is a very stock that is like super, super speculative, but there's a good opportunity. There's high risk and high reward of the stocks. So those are the 3 stocks that I'm going to be watching. The first stock was going to be GNUS, the second stock HTZ, and the third stock is going to be SRF. So be super careful, guys. Make sure you have a plan. All of these 3 stocks are super, super risky, super speculative. Since they're super risky, there's a high profit. You can make a lot of money with them, but also you can lose a lot of money with them. So you always have to have proper risk management. You don't want to just trade it with the money that you don't have or you can't afford. And also use very, very small size. Make sure you have, make sure the size that you're using is very, very, very tiny compared to your overall portfolio, because these companies can go up and down significantly within a short period of time, and they're super, super risky. And make sure you also have a solid plan before you get involved in these 3 stocks, guys. Anyway, if you enjoyed this video, make sure you like it. And if you have any questions, drop in the comment section below, and I will talk to you guys in the next video. I'll catch you guys later, guys. So peace out.